Yeah, so the thing is today it's exceeded 50 people, so 51 attendees. The remaining people cannot join, I think, due to some limitations in GoToMeeting. Okay, so I didn't know about this, and I don't know also how to. Please go on mute, or I will mute, and you can put in the chat. That is fine. So I will be discussing one important topic. Can you make me presenter? Why you want to? What you want to present actually? Okay. So I just want to share my screen. Okay, start sharing my screen. US. Okay. Okay. Is my screen visible? I have some chart, some random chart. I just was studying that chart. Is my screen visible? I have Microsoft
No.
chart open.
No.
Why? Just type chart is not visible. No. Okay. Let me.
Visible.
It's visible, right? Okay. Just put in the chat. I will just start with that. So let me see if everybody is on mute. Mute all other participant. Okay, fine. So today actually I wanted to discuss about many people follow indicators like divergence. Divergence is a very common indicator, common thing. Okay, so I wanted to share. My voice is not visible, audible. Could you please check if my voice I am audible? Are you able to hear? Can you put in chat? Hello, is my voice audible? Yeah, okay, fine, thank you. Not others are able to hear, so maybe you can check. So what I was saying is there are some observations I made. I keep checking a lot of stuffs in the weekend, and I keep researching on things. So I do find some interesting things to share, and which I think of sharing. Okay. So this has nothing to do with like publicity or Privolti or something. This is just my passion. I spend the weekend in analyzing stuff, and if I can share this thing, and people may find it useful because I didn't get it from any book or something, but it is just my observation. So this is not the chart I wanted to look. So any chart, you can take any chart. So basically in the last webinar, I discussed about impulse and correction. So I shared that YouTube link also. So what is the impulse and what is a correction that I discussed. Okay, so I hope many people went through that video because this is important to understand. Okay, can you please write in chat if you went through that video? Impulse and correction. Okay, fine. People went through that. Okay, because okay, you didn't go. Yeah. Ajay said without voice, how to understand? Because others are able to hear, so it should be problem at some person. But it is recorded. I will upload it to YouTube. Is my chart visible? Chart is visible, right? Okay, fine. Thank
Yes.
you. Okay. Okay, so what I will just do is I will just draw impulse and correction. Suppose what I usually do, suppose there is an impulse, then there is a correction, there is an impulse, there is a correction, there is impulse, and there is a big correction. Then again there is impulse and correction, like that it keeps on going. So when we are here, let's say when we are at this point, okay, we are at this point. At this point, why it is not going on mute? Just please mute yourself if somebody is not on mute. Okay, so when we are at this point, we don't know that correction is coming or not, right? So what do we do here? All indicators will say buy here. Do we buy here? If you buy here, maybe a correction can come and you have to wait for the next impulse. Okay, So what we do is we look for a with wave analysis we find out that where this impulse can stop, where this impulse can stop. If using wave analysis we know that impulse can stop somewhere around here, then what do we do? Then we figure out possible where it can stop, like this zone, and we book profit and then wait for this area to be broken. Okay, either it goes straightly up or it comes as a correction, then it goes up. Suppose your analysis is correct. Okay, your analysis is correct and the price starts falling as a correction. So in the last video, in the last webinar, I discussed the nature of the correction. So if price forms the corrective pattern and it is falling in a choppy way compared to the last move, which was smooth and very direct, then what we do is we try to figure out the end point of the correction. Okay, so we find the major trend first. Using wave analysis, we find the major trend. Okay, that major trend is still up, but if we are trading intraday in Nifty or some stock, we cannot simply buy, right? Because a correction can come. We book profits here, then we find out where this correction can end. Either this level is broken or we buy at the bottom. So that's why I always say that don't buy simply. If you buy simply, you will get trapped. Okay, find a reflex point, find a point where prices can bounce off or can reverse. So suppose your analysis says this can reverse in this zone. Okay, so at this point you don't buy here. If you had bought earlier, you book profits here and then wait for the correction to start. Once correction has started, then wait for that correction, find out using wave analysis how far this correction can go. Suppose you have found out around this point it can go, then you have to take a long position here with a small stop loss. That's why I always try to keep the stop loss small. Does not mean all trades will be successful, but what I'm saying is if you are wrong also, you know that okay, this is the maximum it can correct, and if I'm wrong, I will get hit stop loss will be very small. So our thing is to find where the stop loss can be very small. For example, I shared a chart of MMTC, that some stock, some member requested me to analyze. So if you see that, right, that one I have put that where is the maximum it can correct, how far it can go. I'm not saying it will definitely go there, but what I'm saying is there is a most likely chance that it will correct up to certain point, and I will take a buy position at that point with a small stop loss. Okay, so suppose as I'm saying, price starts correcting here and I find out using wave analysis around this point. Okay, around this point it can reverse, so I will buy here with a small stop loss. See, people will say, oh, it has started falling, right? Every time Nifty falls by 100 points, all the analysts keep saying that it will go to 5,000. It goes up by 1,000 points, everybody says it will go to 9,000. That is a common thing if people do. Okay, nobody wants to predict a reversal or a bounce up. Okay, so using wave analysis, we have to find out the possible reversal point. Okay, the more you analyze that, the more you will be more confident about choosing the lowest risk possible. Okay, the more you analyze the chart, more you will be able to find such reversal points. Okay, like I posted Starlight Technology, NSE stock or MCX commodity. Yeah, let's say the stock, right? What is that? Starlight Tech. Okay, Starlight Tech, I had 1 second. I had analyzed a few days back for one of the members, and I said in the chart that 115 is a strong level which needs to be broken, and it fell exactly at 115. Okay, so what I'm saying is, suppose if you know, okay, if you are that much confident about your analysis that it can go 115 is a strong point. Okay, so what will happen is, the more you are analyzing stocks in the weekends or in the whenever you have free time, just keep on analyzing past charts, and the more and more you get familiar with the techniques and the reversal points, what you will find is day by day your analysis will be able to give you strong low risk positions. Okay, there is no guarantee in the stock market, but thing is, suppose 115, I posted that is a strong point. Okay, this is not a previous resistance or support something, this is a wave. Okay, now what you can do is just put a stop loss at 116. Okay, because you are risking a very small, right, 1 rupee, and then you can sell it here. Your friends will say, what is this you are selling? This is a stock which is going up from what is that, August of 2013. Why you want to sell it, right? Everybody is saying buy, but it is not what everybody is doing. The thing is, the more you are confident about finding the reversal point, you can be able to take low risk positions. Okay, you find 115 is the point where it can have a strong resistance. You put a small stop loss of 116 and you sell. Okay, so those are the things. So what I was showing is I can discuss the techniques and okay, just 1 second, somebody not able to hear me. If every majority of the folks are able to hear, just type yes. Yes, okay, fine. So the main aim is not to make 100% correct predictions all the time. That is never going to happen if you study Elliott Waves the end of your life also. But more and more you spend time with it, more and more small stop loss it will be for you. The small stop loss will be exceedingly small, so you will be risking every time small amount of money. Okay, so that's what. So I will come to that divergence thing in a bit. So I first need to explain this. So impulse goes, correction goes in a choppy way, like in the last video I explained. Then again impulse. So when you are here, that's what I was saying. You should not be buying because all the indicators are, people are saying buying. The thing is, you find wave analysis, you find a reversal point. You book profits if you had already gone long, and then you wait for the correction to happen. Suppose worst case correction doesn't happen and goes up. The moment it goes away from your resistance point, right? Resistance, I'm not saying previous resistance or some trend line. Wave, according to your wave study, if it says that this is broken, then you go long confidently. Okay, no problem, you go long. But suppose, since you know that correction can happen, correction actually started happening in a choppy way. Okay, fine, it started happening. Then you again put your wave analysis and try to find what is the possible reversal point. You may not be exact, that's fine. You find somewhere it can, so you buy here, let's say. You say maximum this stock can come up to here or something, put a stop loss up to here. The more and more you will be expert in that, more and more small your stop loss will become. Okay. Just give me 1 second. Just give me 1 second. Okay, sorry for that. I was just getting a call. So yeah, no. Buy stop means I was just on a urgent call. So what I'm saying is this will happen. So now I'm going to teach one thing which I observed, that one. Okay, divergence, right? What is actually divergence and how we can use that in Elliott wave analysis? Okay, divergence is, first of all, let me tell you divergence in RSI. Okay, relative strength index. Okay, many people might know RSI, right? RSI ranges between like 70 to 30. It will be this level will be like 70 and this will be like 30, and slightly up and here and there it will move. So why RSI came into picture? So price can move anyway, any direction, up and down. Your voice is lower. Is my voice audible? I mean, intensity of the voice, the amplitude of the voice. Yes, okay, thank you. So whoever is not able to hear, they can see the YouTube video later on. Okay, so let me quickly go through it. Okay, so what I'm saying is this RSI, right, is actually a representation of the price in a ranging way. So price can go here and there, anywhere it can go. But RSI, what it will do is, or any indicator, MACD or anything, okay, that will range between some point to some point, some up to some low. What it helps is for people who don't know anything, right? No Elliott wave analysis, nothing they know. Simple, they simply want to take some decision based on some very simple thing. Okay, for them this RSI is there. RSI is not for the super expert or something, but um, what I will tell you is about RSI divergence. Okay, so divergence, how to use it in Elliott wave and when to basically avoid it, it will not work. Actually, that is important. When it will not work, divergence. First of all, let me explain you quickly what is divergence actually. Okay, so let's say this one, right? You see price going here 1 2 3 4 5 or something like that. It is going here, and you find that RSI was super high here and super low here, right? You find what you find is RSI is making a lower high here, okay, and here it is going up here. Okay, so price going up, RSI making lower highs, right? So it says that some correction may come, and correction came here actually. Okay, so similarly price is making this, you can say here, this point. If you see RSI is here and it made a lower low here, but RSI made a higher high here, indicating this trend may be over. And see here, this is going lower and this guy is going up. Okay, this guy is going up, indicating this trend might be over. But I will tell you, see this thing. If you see this bottom, right, this bottom and this, yeah, see this, carefully observe this one. Okay, this is going down, but this is going up, right? What it says, this is making a, this lower low is no more, it is low here, this low is up. If you see this low is down, this low is down, but this didn't work here, right? If somebody bought here, he will get stop loss hit because it is going down. But RSI was keep on increasing, right? See, RSI is increasing. So what is happening basically? So basically I will tell you, in the Elliott wave, right? In the Elliott wave, if you simply follow RSI, you will get RSI divergence, you will get stop loss hit on many occasions. So I wanted to basically explain you in Elliott wave, okay, in Elliott wave, using Elliott wave, how we can avoid being stop loss hit when the divergence does not work. Okay, I am not guaranteeing that after this video will be expert or something, but what I'm saying is majority of the cases where your stop loss will be hit due to divergence not working, that will be filtered out, or okay, that will be taken care. Okay, in Elliott wave analysis I will teach you quickly. Okay, this is 1 2 3 4 5. Okay, in this 5-wave pattern, this already I discussed about Elliott wave in a previous video. I will upload it to YouTube and share the link. Okay, don't worry about it. So in the Elliott wave, 1 2 3 4 5, 1 2 3, let's call it 3, 4, and this is 5. Okay, so this third wave, right, is the strongest third wave, strongest. Okay, it will spike up like anything, price will move up like, if you would have bought here, you will be big rich here. Third wave, 5. In the third wave, my trick is never ever follow divergence in a third wave. Okay, that is the secret. Because when the third wave is going, the RSI will show, still it will show divergence. But ignore divergence in a third wave. Okay, ignore divergence in a third wave, because all your stop loss will get hit. It will give fake divergence and you will get screwed up. Don't ever consider divergence in a third wave. Okay, remember this fact. When the fourth wave starts, right, then price will going down, right, and divergence may show it is going up. At that time you should buy for the fifth wave. Suppose if you want to trade the fifth wave, if you wanted to trade the third wave, then you should look for divergence here in the correction. Okay, now the thing is, when fifth wave is going, right, at that time you should look for divergence. So where you should look for divergence? In the second wave correction. Okay, in the fourth wave correction and in the fifth wave impulse. Okay, don't ever go for divergence in the third wave for shorting purpose. I means, oh, RSI is giving here divergence, price is going up, I will sell here. Never ever try to sell for the fourth wave. Never short for the fourth wave. It will be too small and your stop loss will become will get hit. Maybe it will show divergence here only in the beginning stage only. Okay, so never ever go for divergence in the third wave. You look for divergence in the second wave, price will fall. Okay, divergence will go up, fair enough. So third wave you buy somewhere here, wherever divergence is showing, you can buy for the third wave. When you know third wave is going on, never short. Okay, if you exit midway also, that is fine. Book some profit and book. If you are scared, you can leave that end of the third wave and you can wait for the fourth wave. When the fourth wave starts, right, again you look for divergence in the RSI, again then you go long. But don't means in the fifth wave you should be careful, because divergence in the fifth wave can indicate a big correction. Okay, if you want to trade this, look for divergence in the fifth wave. So what is the summary of this one? Look for divergences in the corrections. Don't look for divergence in the impulse unless it is a fifth wave. Why? What is the logic? The logic is fifth wave will be choppy, correction will be choppy. So okay, fifth wave will be choppy in nature, like this, like this, like this, like this, choppy. The more choppy the nature, the more reliable is the divergence. Okay, the more swift is the impulse in the third wave, I mean, the more unreliable is the divergence. So wave structure is very helpful, okay, to avoid getting caught in the divergence. So if let's say your correction started and you anticipate it's a fourth wave, don't go and short it. Okay, you can try to find using wave analysis how far it can go, but keep in mind divergence, because you can buy for the fifth wave again. Okay, if you don't see divergence, if you are a wave expert, you can still go long for the fifth wave. I'm not saying you can't, but if you are a divergence guy, you like divergence very much and you want to use this webinar is especially for those who are a fan of divergence. Many people like divergence like anything, but they don't know why sometimes it doesn't work, sometimes it won't work. Why? Because this is the reason. Wave in the wave structure, never look for third wave or first wave divergence. Okay, basically any wave, okay, where you find choppiness, overlapping of the higher highs and lower lows, choppiness, may most possibly in the fifth wave, that time divergence is reliable, other time it is not. Okay, just let me take a moment. Is my voice audible and screen visible? Somebody asking email link of video. Yeah, I mean email link means I will just put it in YouTube. Any questions in this topic? Okay, his voice is coming. Anyway, if you can see this video later on. Okay, time frame. The time frame is Elliott wave is a fractal, means it will happen in any time frame. This is a weekly chart, right? If you zoom in for 5 minutes chart also, I am sure you will find Elliott waves there also. But what I am saying is, what RSI to look for? RSI you can look, okay, what time frame, right? So it depends. If you want to trade for a long stock, right? I mean long period of time stock, then you look for weekly. If you look for a small time frame, you look for hourly. If you look for even intraday, like Nifty, how I am doing Nifty, I am doing for 1 minute time frame. Each candle is like 1 minute. But it is not that I simply analyze 1 minute. I first look at the whole picture of Nifty, weekly, then daily, then hourly, then 30 minutes, and then 1 minute, like that. So in general, don't try intraday at your own immediately. You can start with weekly, long time chart. Just practice. Just after this webinar, right? Just practice. Okay, just practice on any chart. It can be Indian chart, US chart, Germany chart. It does not matter at all. Everything is just a way. So just see where the divergence is working and where the divergence is not working. And I would request everybody to go through. Once whoever is passionate about stock market learning, right? It does not matter what is written in the books. Just see where the theories are not working and where it is working. Give stress more to the places where it is not working, because if you don't learn why some case it doesn't work, then you will get a stop loss hit. So before putting your money only, you foolproof your theory that this divergence works in this case and it doesn't work in that case. Okay, so don't expose your money unless you become very confident. Okay, what is that RSI figure above which we can sell or help which buy? See, I will go through there. This is not the end of the webinar or last webinar I'm going to have. I'm just going through the basics. Okay, I'm just going through the basics. Just practice this one. Okay, practice this one, and maybe you can send me email. I have shared my email. Like you found some chart. It can be anything, in any stock, any currency, any commodity. Just see the divergence where it is working, where it is not working, according to Elliott wave pattern. Okay, when wave starts or not, that is a different. I will take it up in a day, different sessions. That's not a problem. I will take all the this one should be 14 for weekly chart. Yeah, 14 is fine. Just to see where this just practice after this webinar where you find divergence is working and where it is not working, and just keep in mind the wave principle. I've shared some links also for the Elliott wave learning. Those two links are more than enough. Okay, if you want, I can share the links again in the Telegram channel. So just go through after this meeting, and then I have shared in the Privolti free channel some time back. If you can search, you will find it. Okay, folks, so I have discussed today one very important thing according to wave principle, where divergence works, where it doesn't work. Just go through, you can start with the weekly, go through any of the stocks and you see where divergence is working in the, try to spot it in the fifth wave and in the corrections. Okay, try to spot it. And just you can, if you have any questions regarding this particular topic, we can take it up tomorrow, 8 p.m. same day. So thanks a lot for I will take all the questions slowly in the next webinar. This topic was for this particular topic, and I wanted to keep this keep the weekend webinar short because everybody has their personal work. So thanks a lot for joining, and do email me whether you are member or not member, doesn't matter. Just email me if you feel okay, this is one chart I found where it works, when it doesn't work, what can be possible with this thing, that thing, all this time. So think based on this particular webinar's topic. Okay, and my email ID I will just put it in the Privolti channel. Okay, yeah, I will post the Elliott Wave study links also, which I had shared previously. So thanks a lot for everybody for joining. I really appreciate because it's a weekend and you have spared 30 minutes of your time, of your valuable time actually. So thanks a lot, and catch you in tomorrow's webinar at 8 p.m. Till then, you go through this and let me know any questions in the email. I will share the email. Thanks a lot, and good night.